Now for a special chat, Pradeep Chaudhary, Chairman at SBI, joins in on the show. Mr. Chaudhary, hi, afternoon. The government has finally moved on FDI reforms, though a few sectors like insurance has still not been relaxed. What's your view on this? Do you think it will help improve sentiment on board?
I think we should first look at the positives rather than putting the worries in front. So the 100% FDI in telecom has been extremely useful and very welcome, because telecom is a capital intensive sector, and we have seen some of the telecom companies where the global partners are willing to put in the money, but the domestic shareholder or the domestic partner is not able to put together the cash or doesn't want to invest. So with this 74-26, so this was all coming to a knot. Now, since the global company can take 100%, I think many of the struggling telecom companies can get well capitalized.
Mr. Chaudhary, let's also talk about the RBI action that came in just a day before. The RBI, of course, has taken a slew of measures to tighten liquidity in the system and in turn stabilize conditions in the forex market. What's your sense? How effective are these measures likely to be?
See, it is not right for me to sit on judgment of RBI, and secondly, it is always easy to say with hindsight. But RBI had a burning problem at hand. The currency was feeling very weak, and they had a mandate to, lend stability to the currency. So they have done whatever they thought was right. But my difference with RBI is only on the nuance. In fact, I would prefer, and we are going to tell RBI in the next meeting whenever it happens, that please don't choke availability, raise the price. In fact, faced with this situation, it is quite understandable that RBI may have had to raise the repo rates. In fact, if the repo rates were raised, or even if they are raised now, I think they would reach the similar objective rather than choking the supply and putting restrictions on the LAF amount. You need to do whatever has to be done, because the currency the parity has to be held. So it calls for certain measures. And globally, whenever the currencies are under attack or currencies are facing a threat of diminution in value, interest rate increase is a very standard prescription. This happened in, I would say, Brazil, in all of Southeast Asia, all of UK, and everywhere it happens. So nobody would take it amiss. But I would prefer that RBI increases the repo rate rather than putting restrictions on LAF.
Mr. Chaudhary, but do you feel it may be in fact counterproductive, as the liquidity tightness may force banks to raise lending rates, thereby pressurizing growth further?
See, life does not give you choices. This is a real world. You don't have the luxury of doing this and that and the other. Like if you are driving a two-wheeler and your truck is coming the opposite way, the wrong way, do you argue with the truck or do you get off the road? So RBI had to do something in double quick time. You don't have the luxury to wait that I'll do this and that. And basically the central bank has its mandates, and all of us, including the central bank, have to prioritize. That if you have 5 mandates, you can't attend to all the 5, then which are your top 3 priorities? Now RBI, for whatever reason, has chosen to have inflation and the currency value protection as the top priorities, and the action has been taken, and this is called an impossible trinity, that you have stable exchange rate, you have low inflation, and you also have a stable currency. So perhaps you have to sacrifice one of these.
Mr. Chaudhary, do you see deposit rates again going up in the system after the RBI's measures to limit borrowings? How will this impact SBI in particular?
Not at all, because I have always been saying that the bank deposit market and the bond markets are very different. That is why when there was a clamor that when the repo rates have been reduced, you reduce the deposit rate and the lending rates, we said no, because these are two very different markets. So today, if the bond market yields have gone up, The deposit yields have not. So there is no pressure on my retail deposits to increase the rates. So therefore, consequently, there is no pressure on me to increase the lending rates, because these two, the bank deposit rates and the bond market rates, have a dynamics of their own, and I would say these are two parallel yield curves. Now what we have seen, the CP rates were at 8.26, 8.30, the loan rates, the base rates were at 9.7 to 10. So there was a spread of about 150, 175 basis point in these. Now the bond prices and the loan markets are converging. So the bond yields are coming to the loan levels. But there is no particular reason for. In fact, we stand to benefit, because earlier we were investing in CPs at 8.2, 8.3. Now all these people, when the CP market has dried up, would come back to the lending market, where we will receive base rate plus X. So our average lending rate in these markets would become 10, 10.25, which is quite higher than 8.3. And secondly, in SBI, we have zero reliance on wholesale funding. We don't have a single rupee of CD outstanding. So therefore, in fact, we are a lenders in the CD market. And about 10,000 crores of CDs are coming due for maturity up to the end of July. So we have absolutely no reliance. That's why I think we are very comfortable, and our funding sources are very stable. It is 100% retail.
So the recent trends on headline inflation, Mr. Chaudhary, have been comforting, but high CPI and food inflation, as well as the weakness in the currency, continues to spoil the party. With such a backdrop, could one expect any sort of rate easing from the RBI in July?
See, I'm not a macroeconomist, so I cannot comment on that. Again, RBI would have multiple priorities. So what is the priority? If you say price containing inflation is a priority, 1. Lending stability to the external value of rupee, 2. Stimulating growth in the economy, 3. Now, it is ideal if you can pursue all the 3. Now, if you can't pursue all the 3, and you have to make a choice that I'll pursue 2 or I'll pursue 1, so then you have to narrow down your choices. So that is for RBI to decide that which is their highest priority and attend to that, and perhaps they would have done that, and I think they have a very well composed team of advisors to take a call on these issues.
Mr. Chaudhary, there are some who are not even ruling out a rate hike by the RBI. Many economists believe that that's a possibility in response to the recent rupee weakness. How will you respond to a status quo on rates? What's your sense? What's likely to happen in the July policy meet?
See, RBI has to take a call that where do they want to raise the interest rates, or can they lower the interest rates, or they leave them as they are. Now that's a call the central bank has to take, and I'm sure they would take. Now our funding is not at all or very weak correlation to the wholesale market, the bond rates. Our funding, as I said, is 100% retail. So therefore, when the repo rates go down, our funding costs are not affected. And when the repo rates went up in the last 2 years, we didn't raise our deposit rates, or we didn't raise our lending rates either. In fact, I would say if there is a single largest factor of correlation or point where we take it as a cue, it is the small savings rate. So if the small savings rate remain where they are, our deposit rates would also remain where they are, because we don't resort to wholesale funding, so we are indifferent.
So, Mr. Chaudhary, in terms of your margins then, a number of PSU banks have been cutting their base rates and willingly taking a hit on their margins. Is that something SBI as well would, look at doing?
We don't have to, because as I said, we don't rely on wholesale market, so our margins are not affected, and our base rate has been 9.70. Whereas most of the PSU banks were perched at 10.25, 10.15. So they have come at 10, and they would have to do that, because I told in the meeting with the finance minister also that if any bank sits with a base rate of 10.25, it can never, when other banks have base rates of 9.6, 9.7, 9.75, even 10, this bank at 10.25 can have absolutely no possibility of attracting good assets. So unless they lower their base rates, they are not going to get good assets, and our base rate at 9.70 is still lower than the base rates of some of the PSU banks who have rolled down their base rate, and we are having very significant opportunities of refinancing more expensive loan from other banks and other financial institutions. In fact, last month itself, or this month itself, last week, we have refinanced loans to the extent of about 2,500 crores. Another tranche of 10,000 crores is going to happen in the next couple of weeks.
Mr. Chaudhary, a final word from you then on the fine that's been imposed by the RBI. SBI has been fined 3 crore rupees for flouting of KYC norms as a fallout of the Cobra Post expose. What measures and steps are you taking internally to prevent such lapses?
See, we would see it as KYC and money laundering. So, in response to the Cobra Post allegations, we ordered an inquiry, and in all these cases, specific cases in these branches, nothing irregular or inappropriate was discovered. We have shared that report with RBI. Now, in such a big bank, there have been some instances when gold for 70,000 rupees has been sold without taking the PAN number. Now, of course, this is a violation of KYC, but I do not think, it is such a big thing, but we are not downplaying it. The important thing is we need to have IT enablement. So that is the area where we are working on, that anybody tendering more than 50,000 in cash does not give a PAN number. Immediately the IT should disable that transaction. So rather than trying to supervise millions of transactions across the country, an IT enablement we think is a much more efficient way of doing, which we don't have today, but we are building it up, and I think it should be up there in the week or two.